So you wanna go to war with me? You're talking like you think you're royalty. You think that I'm afraid, but I don't break. I heard you question my stability. You think I'll fall just like a guillotine, but I am here to stay. Won't look away. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the. I'm coming for the throne. For the throne. So you wanna be my enemy? You should've known I'd never kiss the rain. Ice runs in my veins, won't play it safe. I don't belong with your nobility. Who died and made you king of anything? You think that I'm insane? It's your mistake. Kingdoms rise and fall. I've come to take it all. I'll take it. I've come to take it. Kingdoms rise and fall. I've come to take it all. So you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the. I'm coming for the throne. For the throne.
Go, yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same. Cause that's what it takes. on the vibe. I'm never gonna look back, cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change, slowly take a step today. I will never be the same, cause that's what it takes.
All right, guys. Happy Monday, July 21st. Welcome back to the show. We're going to have hopefully a couple guests on here tonight. I got one waiting backstage. We're going to talk some retail stocks, some momentum trades, day trades, crypto, maybe the wheel strategy, and we're definitely going to talk some options. And speaking of options, let me bring Conway in here. I don't know if you guys have met him yet. Well, it's his first time here on the show, so maybe you know him from Twitter. Conway, how you doing?
I'm all right, Tony. Thanks for having me on.
Welcome. It is funny timing because I was peppering my Discord with messages in the GameStop room this weekend about the low IV, and we were also independently, just people that I voice chat with, having conversations about the low IV on GameStop. And then I saw that you were tweeting about it. Was it yesterday or today or both?
I wrote something today, but I've kind of been commenting in other people's subtweets, on and off for a few days.
You seem to know a lot about options just based on my reading of your tweets. They always seem well thought out, and I wanted to give you the opportunity to share your thoughts with maybe a wider audience or some new folks.
Sure.
So what are you thinking about the IV, and what are you thinking about the move up? Like I was kind of prepping my Discord that, hey, this may be, I don't give trading advice and I don't give price predictions, but maybe if the IV is low and if there were a catalyst, now is the time where you'd want to buy call options, not be a seller. We like to sell into high IV environments and buy into low IV, but you got to have a catalyst to get those call options to pay off if you're buying, right?
Right. Right.
So
no, exactly.
Tell us your general thoughts. Like that's all the opening I'm going to give you. I'll let you take it from here.
Well, not gonna lie, some of the comments that I was reading online about how low GameStop IV was were kind of driving me a little nuts because
Why is that?
One, it was pretty obvious that was going to happen. Two, I predicted that this was going to happen just purely based on monitoring options and flow. And three, like a lot of people seem to talk about it like it's some mysterious black box. They don't really know how it works or anything like that. And it's purely a mechanical response.
Right.
Volatility is low when there's a lot of people selling volatility. So if a lot of people are selling calls or puts or both, IV is going to go lower because it's a function of gamma flow. And what is gamma, right? Gamma also, like, where is gamma the greatest? Gamma is highest when options are expiring soon and when the strikes are at the money. So you put those two together and you look at options activity on any sticker. This is not unique to GameStop. It's any stock that has options, and you can kind of get a sense of what's going on. So for GameStop specifically, activity is almost always concentrated in the very short expiries, weekly, 2 weeks, out.
Our low days to expiry swing traders, right? The people we see out there on social media that are always swinging for the fences, hoping to get lucky.
Right. Either buying or selling. Exactly.
That is not me, by the way, guys. I mean,
Me
I
neither.
will buy options if I get a confirmed movement sometimes, but generally I'm not, especially on stocks like AMC and GameStop. I'm not playing very close expiries. In fact, this weekend when I was talking about it in Discord, I said, if you choose to take this gamble, if it was me, I'd be looking at 3 to 6 month expirations, close to the money.
For me, it really depends. Sometimes I like the longer dated trades. Sometimes I like the shorter dated trades. It really depends on what's going on. It's not a recommendation, and it's not really something that I can teach. But sometimes, if you're expecting a sudden move and a short move, the maximum amount of profit that you're going to be able to squeeze out of a move is going to be in the short dated expiries because of gamma.
If I knew that there was a catalyst I was expecting, I would have had a different thought this weekend. But I'm just like looking at the stock and the chart, and I'm like, I got nothing other than IV being low. I got nothing to say that it's going to run up.
Right. Now, there was no real reason to expect it either. The only thing, and I posted about this too, the only thing that I really saw happen today was that this morning at 11:31 a.m. Eastern time, there was a 4,000 lot $24 call block traded for the October expiration. And then kind of nothing happened. Price just kind of chopped a little bit. It actually went down. IV also went down. But those calls were purchased, which you could tell from fixed strike vol. And the expected thing to happen would be that price would go up if a lot of calls were bought, and that IV would go up if price was moving towards where somebody had bought a lot of options. And we didn't get that. I later found out from somebody that commented that it was a cross trade, that it was routed through the Chicago exchange, and it was a contingent trade where somebody sold a bunch of stock in order to purchase a bunch of call options. So that makes sense within that context. And it wasn't until almost an hour and a half later that price really started to move. But if you looked at the options chain, what really happened was a tremendous amount of volume came through in the weekly options. So if you go right now, for example, on any option screener and look at GameStop activity today, the highest volume strikes that you would see happen today happen in the weekly 25, 24 and a half, $24 call options. So there's a lot of open interest at those strikes. Something that a lot of people don't know is that most of the time, most of the options that exist that persist as open interest are options that have been sold to the market, not people speculatively buying options.
I keep on saying that
direction.
on X, like you guys are you're posting these bullish tweets saying, look what someone bought. And I'm like, how about if you think of it as, look what someone sold?
Yes, exactly.
Because if you're a wheel trader, if you're selling options, especially options that are covered by shares that you own, you know what I'm talking about. We often think of option trades we see out there. Someone just made a fuck ton of money on premium selling.
Yep. Exactly. And what ended up happening was it took all the way from 11:31 a.m. when those 4,000 calls showed up as one single print, all the way till I think it was 1:34 to 1:37 in the afternoon Eastern time for liquidity to start turning bullish. And what I mean by that is I use this liquidity indicator from Deep Dive Stocks, and it tells you when people switch from being aggressive sellers or aggressive or eager sellers, suddenly they turned into eager buyers. So we saw volume start hitting the ask. So bidders were starting to lift the bid. They were starting to increase the price at which they wanted to buy the stock. And then it got very aggressive very suddenly. And what happens when people start aggressively buying something? Price goes up, right? Makes perfect sense. It's always
Yeah,
supply
it's
and
more
demand.
demand, so price is going to
Exactly.
go up.
Exactly. And where was that supply going to come from? It was going to come from people who were either selling the stock at higher prices or people who agreed to sell the stock at higher prices, aka call sellers, right? So if a lot of this activity is options being sold to the market, and let's say somebody had sold a $25 call and they were naked. They don't even own the stock. They're not covered call sellers. They're just on margin and they're just trying to collect premium because they're trying to earn an income or something like that, right?
Just so we're clear, because some of the GameStop YouTubers don't understand when you say a naked call, this is not a illegal trade. A
Correct.
naked call is just a call that you sell when you don't own the underlying shares versus a covered call.
Correct.
One of these blabbermouths was saying, "Call the FBI." He's talking about naked calls. We need to report this to the SEC. Look, if you're not an options trader, I get it. You don't get it, but let the grown-ups talk here. Go ahead, Conway.
Yeah, and to kind of piggyback off that comment, you can be long a naked call yourself. You know, that's just the lingo that's used in options trading, right? So if you
Yes.
just own a call straight up, you have no hedges, it's not a spread, whatever, you're long a naked call. That's not illegal either. In fact, that's the trade that I see most GameStop bulls, quote unquote bulls, participate in most frequently, is that they're just slamming calls. They're naked long calls. It's just the nomenclature used in options trading. So, but to finish my thought, let's say these people sold $25 calls expiring later this week, and they start seeing this aggressive activity. Well, what are you going to do in that case? You're going to get the heck out of the way because you don't want to be risking assignment for shares that you don't own. So all of a sudden, we saw this tremendous amount of activity in those call options, and so price went up. We saw a lot of volume. Most of the volume happened all at the same time in the same exact 1 minute candlestick. You know, so then you get these parabolic moves up, and everyone's like, "Oh, what happened? What happened?" Nothing terribly special happened. It's a normal thing that we see in options trading. Happens all the time.
Did I see you saying on X that you were actually predicting IV to go even lower than we were looking at on Friday's close?
Yeah, so that was the other thing that was driving me crazy was I started seeing people talk about, oh, it's 52-week IV lows on GameStop, you know, starting maybe a month or 3 weeks ago or something like that. And I'm like, okay, and like these people know that IV is going to go even lower, right? And the reason I was saying that was because, you know, I track options very closely. I see a lot of options being sold, but also, as I mentioned earlier, IV changes based on where gamma is concentrated, right? So if price is moving towards those areas where a lot of options had been sold, IV is going to go down. That's just the way it works.
For
there's nothing
those
mysterious about it.
For those that are not frequent option traders, if we could summarize IV into a simple concept, would it be fair, in your opinion, to say that a low IV would be the market's signal that they are not expecting a lot of volatility in the underlying stock?
Yes and no. So yes, because that is the most common thing that I hear when people talk about IV. No, because the closer you study options, the closer you monitor how options actually trade, the more you realize that IV is fake. And what I mean by that is just because something is low IV doesn't mean it can't suddenly increase if activity
Yep.
suddenly decides to show up, as we saw today with
Yep.
GameStop. GameStop went from 55% IV, according to Thinkorswim, this morning, and it went up to the 67% IV range, which is, for a single day move, that's a very large swing in implied volatility, right? But it makes sense when you consider, oh, well, a bunch of people that had sold options, which would decrease IV, suddenly bought those options back because most of them had sold calls. And if you are buying calls back, what happens to IV and what happens to price? Price goes up, IV goes up. It's a mechanical response. It's nothing weird about it. There's nothing mysterious about it except for maybe the precise calculations, you know? So what was driving me crazy?
I see you focus a lot on GameStop when you're doing your comments, are you or have you been a GameStop investor, the underlying stock?
Yeah, I first bought GameStop in 2020 before the quote unquote short sneeze of
Okay,
2021.
nice.
And it just kind of fascinated me ever since for how like something could move so violently in both directions. I wasn't really into options back then. I didn't really understand it too well, but since then it's kind of become my autistic special interest. If
It
that's
is
okay for
good
me
to
to say.
to get to know one company and everything about it, especially if you can understand the option flow, and then really just farm that thing.
Yeah, yeah, no, I think a lot of information can be determined from how options trade because derivatives pricing just doesn't really lie, So when people are saying, to expect sky high prices and, whatever, this or that, well, you can call BS right away if you see flow contradicting that, if you see liquidity changing, contrary to that. And to that end, I think I've been pretty good about accurately and publicly, you know, telling people about where I thought a bottom was in price and warning shareholders about where, a top might be in price. And I say that because I'm a shareholder too. So if something comes along that makes me think, okay, I'm going to lose money here, I would figure that other shareholders might probably want to know about that too. But it's tricky with GameStop and other retail favorite stocks because people get very emotional about these things and then they
Oh,
tend to
tell me
lash out
about it.
very angrily.
Tell me about it. I was going to ask you, do you ever get accused of working for the shorts or being short because
I've
you
been called,
focus on financial facts?
yeah, I've been called a shill. I've been called a hedgy plant, a government plant. I've been accused of wearing tighty whities as if that somehow affects
Oh,
GameStop stock or something like that. Anything that I can, yeah, I've been kind of called everything.
I get called that on a daily basis in every
Yeah,
ticker imaginable that I dare to express an opinion in.
yeah,
There are a lot of people, unfortunately, as you have observed, if you don't tell them exactly what they want to hear, which is that their ticker is going to $1, $3, $5,000, then you must work for the shorts. How
I mean,
about I just like to use logic to analyze what's going to happen next and then play my
right.
trades accordingly. How about that?
To that I say, if you think it's going to go to $1,000, well, let's see it. Are people still really willing to pay $1,000 a share if it ever gets there? If not, guess what? Price is not going to get there. That's all it is. It's supply and demand.
And I always hope any of these do go to $1,000. I don't short
Oh, me
stocks.
too.
I hate shorts. I understand they have a purpose, but not a big fan. But I think, what I've tried to talk to my audience about, in no matter which ticker you're in, is, and I've been doing a lot of work trying to now preach this message to GameStop people, as GameStop has really been transitioning now to a profitable company. But we have these convertible bonds now. We got all the new shorts that are delta hedging their bonds. I think whether you're talking about bond traders or just shorts on any ticker, you should understand how they're analyzing the play, and what they are thinking is a fair value price might be completely different than what we think. But
Yeah.
you should attempt to understand how they're thinking so you can strategize your trades for optimal entries and optimal profits.
Yeah. And again, with anything related with equities and trading, there's always risk involved. And I think some people don't fully appreciate that.
Sparky, what's up? I see Sparky in the chat. He's I don't know if a bond trader is the right word for him, but he's he doesn't deal with GameStop or AMC, but he is in the bond industry. Maybe a portfolio manager for not on Wall Street, none of that stuff. Everybody Conway tries to say all my contacts, are shorts. Oh, I know a private equity guy. I know one private equity guy that puts deals together in the eye surgery industry. Imagine, and I see this happening in the vet industry too. Imagine all the clinics out there where one doctor started it 10 or 20 years ago, and he's ready to cash out. There's thousands of these clinics, vet clinics, eye clinics, any type of clinic. There are private equity companies that are buying them up and making a new conglomerate that maybe one day they will, once they have enough of them and they can control pricing, like private equity likes to do, then maybe they will take it public. My acquaintance, who used to be a client of mine, now I just call him a friend because he's not really a client anymore. I would pick his brain. Like, what do you look at when you're looking for these deals? And, I always hear private equity guys are talking about EBITDA. But there is more to it than that. I never talked to him about shorts. He doesn't go out and short stocks. He's looking for businesses to analyze their financials and buy them and then add them to his stash. Yeah. To eventually take it public. There are those private equity guys, and it's good to know people like that because you can pick their brain about different things. I've never once talked to him about GameStop, any retail play, or shorting, because that's not what he does. But I did hear the GameStop loudmouth. Oh, Tony, he's in bed with the private equity. He admits he has friends. I just explained the situation to you. But, these guys will lie and they'll twist facts to suit their narrative because they don't want people, their audience, listening to rational investors such as myself. And it seems like yourself, Conway. I try to be. Yeah. I've only observed you be rational. Thank you. It was just my feeling that since you're rational, you must get accused of being a short a lot like I do. Yes, especially because, again, back in 2020 to 2021, I knew very little about options. I fully admit that. And I definitely spent too much time on Reddit trying to figure out, well, what the heck just happened to GameStop? And I'm sorry to report that, honestly, I don't think most of the information you can find on Reddit when it comes to stocks, investing, or trading, I really don't think most of it is accurate or useful. It's entertainment. I think it's bait. It's entertainment or it's bait. Yeah. And it could be bait. Yeah. It could be bait to, sometimes I think it's bait to get people to hold so that people can sell them options or even get out of a position at a higher price. It really is infuriating to me. It's infuriating to me too. I saw, I'm going to bring up a different ticker because I saw a joke today about what you got? Open. I haven't paid attention to Open almost at all. But I put that on the video title. Let me bring up the chart here. Yeah. The joke that I saw today was, people are saying to buy Open. Oh, but other people are saying to sell Open. And it's like, this is the source of both of those messages. And it's just a picture of Jane Street's trading desk because they're just trading the flow and they're making money off of people buying and selling. Is the ticker Open used to belong to a company called Open Table. Open Table is a restaurant reservation. Right. I mean, I used to trade that ticker, 10, 15, 20 years ago, but this is not the same Open, is it? No, it doesn't appear to be. Open Door Technologies. Yeah. I've got the chart up here. So it spiked from 51 cents up to 4.97. Then I was watching social media today that had a massive sell-off. Do you know what happened? Not really, but the comment that I made to somebody that asked me was, look, it's at 335% IV. That strongly implies that this is a bubble that is being driven by call options. And people have to remember that options expire, they decay, so if people start taking profits on call options that were the primary driver of the move in the first place. I mean, this works both ways. So if something's going down in its put options or something's going up in its call options, either way,
IV is extremely, extremely high. If people start taking profits, well, what do you think happens? It's like a
Yep.
domino effect, like the first person that ends up taking significant amounts of profits, well, what do market makers have to do? They have to sell all the shares that they bought to hedge those calls in the first place. They have to sell it back into the market. Market makers are aggressive transactors by nature. And so they're going to aggressively sell if people take profits on call options. They're going to aggressively buy if people take profits on put options. And price can very violently go the other way because IV is a function of gamma flow, and gamma, has to do with options. When that happens, price starts falling. IV starts falling because so much gamma is being sold back to the market, and it's just
We see that a lot in GameStop too, right? I've seen that happen. Like on Fridays, all of a sudden the price just craters, and it's typically driven by options traders closing out their positions.
Yeah. Yep.
And people think, oh, it's crime. No, it's actually related to all of you guys buying options, not just retail and institutions too, and then locking in the gains because it ran up all week and it's about to expire, or they don't want to hold it through the weekend. And once all that option activity turns into sells, your price is going to evaporate on the underlying.
Yep. Another way to thinking about it is, thinking about the implied order book, which is a concept that I think some people may have dug into in the past, where, at any given time, there's only so much passive or resting orders to buy or sell a stock at various at price levels. And there's a way to smooth that out, which brings up the wheel strategy you mentioned earlier. The wheel strategy, of course, is finding times to sell covered calls, finding times to sell puts. And what that helps to do is it thickens that order book so that if price does fall, there are passive buyers that are willing to buy the stock back up. Because again, if you have sold a covered call, for example, what happens when price falls, right? Market makers need to buy shares back, right? Because let's say you sold a 30 delta call, and price falls, and now your deltas go from 30 to 20. Well, what does that mean? A market maker needs to buy back 10 shares per call that you have sold. And if there's enough of that activity, which we see all the time in things like the S&P 500 and the NASDAQ 100, but we don't really see in individual retail favorite stocks, well, that order book is very, very thin. And so if something negative happens, you get these tremendously bad price shocks that go in the downwards direction. It's terrible for shareholders, but it's also, again, a natural part of markets.
And that is why I think, having some discussion like this about options trading, even if you don't want to trade options or you don't like options traders, it's good to understand how it works and how it can impact the price of a ticker, so that when you're buying GameStop and you see it running up and then it just evaporates on a Friday, you can, options. Thanks. Thanks, options traders. Let me bring Kevin in here. Kevin, free from it all. I see he joined in the back room. Kevin, how you doing?
How's it going? Can you hear me?
I can hear you. Yes, sir.
Okay. Who's
Conway,
this
can you hear him okay?
other gentleman? Conway. Does
I'm
he
here.
have a YouTube channel?
Conway, he is Conway Yen, Y-E-N on X.
Okay. Let me pull this up here.
Conway, you don't have a YouTube, do you?
I don't, but I've been telling myself I should start one for a while.
What is your X, buddy?
Just Conway Yen. So CONWAYYEN. 2 Y's.
Kevin, I think is also. I think Kevin has not been on my live stream before. Kevin is a YouTuber. What is your channel, Kevin?
Free from it all.
Free from it all. I didn't know if it was Kevin Free from it all or Free from it all.
Just free from it all.
I think, Kevin, if we go back, you and I have known each other, through commenting on YouTube for several years, right?
Yeah.
Would it be fair to say, Kevin, that you hated me the first time you heard of me?
No, you were fed misinformation by this other kind of guy that was a little nefarious between us.
Oh, I thought that, because I as I do from time to time, I monitor other channels. I like to see what everybody that is talking about momentum trades is
Literally
interested in.
never.
And I like to
said it,
dig into the DD and the filings, and sometimes I leave comments. And I thought you got mad at me once or twice for comments,
No.
but then I saw you. You know, you've really gotten much better about digging into the filings also over time.
I think you might have. It might have been on my first play or something. I don't know that I was talking about, but I don't. I mean, I think we've pretty much aligned on almost every.
Yeah, I've
time
noticed
we've looked
when
at something, because everything seems to be pretty pump and dumpy and not.
when I tune in and I listen to your little snippets, I'm like, yep, that's something I'd say. Kevin's saying exactly what I'd say.
Yeah. So I don't really follow almost any YouTubers at all at this point. So I think I saw you online, like it like advertised that you were live one time recently, and you had said you've been sober for a while or something like that.
Oh,
That's the last time
I had gained
you.
a lot of weight because I hurt my back in the gym,
Yeah.
and then I had to stop lifting weights and
Yeah.
got out of my exercise routine, and I had put on too much pounds from lack of exercise and not eating right.
Yeah.
So I went on a strict carnivore / keto low calorie diet on January 1st, and including cutting alcohol.
Are you still on that? I was thinking about that.
I am still on
carnivore one.
that, yeah.
It's supposed to be
although
really good for like killing off
Yeah,
lingering issues.
I lost about close to, I don't know, 25, 30 pounds
Wow.
since January 1st.
Just you're eating steak and eggs in the
That's impressive.
for breakfast, and
Yeah.
steak for dinner.
Chicken, pork,
Oh,
fish,
chicken too. Okay, I thought
Yeah.
it was just like red meat.
any meat. And as I've been increasing my workout, I've been allowing a few carbs. Still trying to avoid alcohol. Like I'm just drinking water tonight, but I have had a beer or two since July 1st. But we're not doing alcohol live streams. Maybe you know, when I get down to 12% body fat, maybe we will.
How do I chat in your chat on the side here? Someone was like, "Hey Kev," but I don't see where I can chat with them. I can chat with you.
If you
private,
chat on
with
your,
me.
are you're not live on your channel, right? With this restream.
Oh no, I just clicked your link, man.
Yeah, just
And I told people to come join your YouTube. So
yeah,
that's
so
fine.
you can chat in my YouTube chat then.
Yeah.
And
Okay, cool.
if you ever join before the live stream starts, then you can live stream it on your channel at the same time. But you got to start that before we start the live stream. And then they could chat in either one, and it will both show up on the screen here. In fact, let me put the chat up on the screen. All right.
Stuck on slow mode. Maybe you can give me a.
I have it on 30-second, one chat per 30 seconds, just to cut back from spammers. You know the ones, Kevin, the ones who want to type the same comment over and over and over. Big B says Kevin is a real trader, tells it like it is. Yes, I appreciate that. He is opinionated like I am, and he does not hold back. So you can love us or you can hate us.
It doesn't really matter what anybody thinks of anybody else. Really, it's your own money, and you put it where you want. And
we're just here sharing thoughts.
that's
So
like,
not
you know what I mean? Like you're allowed to disagree or agree, but I do tell people that, like, you know, you're pretty knowledgeable with filings and actually doing deep dives and digging into that. Not a lot of people do that. It seems like me and you are probably one of few who actually do that. Like I did a video on Open Door last night and was going through SEC filings and stuff like that, right? So
can we pivot to Bull for a second? Conway, have you been tracking the ticker Bull last week?
Not at all, but I can look it up if you need
Kevin,
some
I reached out to
information.
Kevin because we in the Discord were talking about Bull last week, and then they have had some dilution filings out there since May, and it absolutely cratered.
it was about 19% of the flow is what it's going to be.
It absolutely cratered. Now, my discussion when I was talking with folks last week was be aware there are dilution filings out there, and at least one of the guys went and bought it anyways. And then the morning, Friday morning, he said, "Tony, what happened? Webull just tanked." I'm like, "Well, remember that dilution talk that we had?"
Yeah, there's some people in my Discord. They're saying it's like recycled news and stuff, but it's really not.
It
because
kind of is, because they've been dribbling these prospectus out since May 15th, June 15th.
Yeah, but
Live.
they haven't acted fully on it, right?
Right.
So
Until
it's-
here. Now they did. It's kind of weird. It's kind of weird.
To my knowledge, they still haven't sold all these shares or anything like that. They've only sold a small portion of it.
Kevin Jones says, Conway is a legend. Conway, you got a shout out there. BW says, hey, gents, it's my wife's birthday. Happy birthday to the wife. Take her out and do something special.
Thank you, Kevin.
Kevin, give us, free from it all, give us your elevator pitch on Webull. What were you telling your audience into the end of last week or over this weekend?
Oh, I mean, it hasn't come up too much. I mean, we were paying attention to it, since probably about a week and a half, 2 weeks, more probably to do with Hood going up so much as an alternative, So
what we were looking at, and I don't know if you saw this, we were looking at like the valuation of Hood compared to the valuation of Webull, and trying to figure out, why does Webull have a PE of 3? Well, at least here it says 11, but on the stock analysis, it was saying 3. And I'm like, that makes no sense. How?
I don't even have a PE on it. It's got negative EPS, so it shouldn't be any, really.
I'm seeing PE trailing 12 months, 11.76, and like you said, no forward PE.
And then the PE of Hood though is like 60. So so Hood is overbought.
I would think so, but I mean, that's what happens when stocks are popular and people think that they're going to keep growing.
Are you here?
Hey, mediocre. Hang on, mediocre. I DM'd you on Discord a invite to join the live stream.
Oh, you're live now?
I'm live now. Yeah. Check your DMs.
Yeah. All right. Give me a minute.
All right. I guess mediocre just got home, so maybe he'll be joining us too. I thought I saw you do a live stream or maybe a 30-minute video with thoughts on bull. Kevin is.
Oh, I probably do have it. I haven't even looked, and I was live the other day, and we were watching it as it popped up in the after hours. So, but I've been talking, because I have a section in my Discord about like long-term plays, like 401k, I call it. Right.
Yep.
So, and that's where we discuss, maybe if you're not going to enter long on a play, the alternative is, selling puts, which is actually bullish. So you're expecting it to rise, and then if it falls, you're not susceptible to so much damage from, FOMOing into a play, and then the stock falls on you, and now you're just left holding bags. So like last week, I had sold puts on this at 15. It was like 17 and change though. So I was going to give me about 15% downside protection. Obviously, the announcement or re-announcement, whatever you want to call it, happened in about 15 minutes after market close. I was actually able to get out of those this morning without really. I only lost like $80 or $40. Sorry,
Yeah, I see it popped up to 1657 or so.
But
briefly this morning.
Yeah, so I actually could have got out of them with a profit, but I was asleep. So,
Conway, did I hear you groan when he said selling puts?
There's a couple of things I wanted to chime in on.
Yeah, go ahead.
Just so people are aware, selling puts is usually considered one of the more dangerous things that you can do in the options market.
However, it is also a foundation of the wheel strategy.
Correct. It is also an extremely common practice, particularly in the broad indices. So it's
I'm not sure why you're saying like it's extremely dangerous.
Well, think about it. A normal stock how does a normal stock behave if price falls? IV shoots up, right? And let's say you have sold a put on it
Yeah.
and price falls. Well, not only
Yeah.
are you potentially at risk of being assigned at a higher price than what the market is currently pricing, but to exit the
Yeah.
position, IV could have gotten so far away from you that now you're on paper showing a much larger unrealized loss um, than
Yeah. I mean, it's not. It doesn't. There's. I mean, simplistic trading is buying a stock and holding
yeah,
a stock.
yeah,
Options trading, you can buy calls and you can buy puts. And you want to advance from that, you can sell
yeah,
calls, you can sell puts. You want to advance from that, you can do butterflies, you can do
sure.
condors, you can do straddles, you can do strangles. Actually, the more advanced you get with options, the more safe it is, not the less safe.
If I was looking at bull and I have it up on the chart here, I would be like, if I was running the wheel on it, I always tell people sell a put. If you don't have a position and you want to sell a put, pick where you don't think the stock will fall to. So I'd be looking at like this 1350 level.
Yeah.
And
And
if
what I
it
would say
fell
is
that
that
far, I'd be willing to buy it. I'd be willing to own it at 1350 if it were to crater.
That's exactly the mentality behind selling a put. You choose
yeah,
a strike where you're comfortable actually picking the stock up, and in the interim, you're getting paid.
Right.
You're getting money. So if
yeah,
you don't have to FOMO into a play that you think, so all of retail was thinking that it was going to 20 because that's all they ever do is they pick block numbers that don't mean anything. They don't consider a lot of them don't consider market caps, and they go $5, $10, $15, $20. I was
yeah,
discussing this today. They go Nvidia 200. They don't even consider the fact that Nvidia 200 means Nvidia $5 trillion. They don't care. They don't even understand a basic concept like that. So the whole point of like the puts, right, is you're if you're going to sell a put, I said it's bullish. You don't want to be doing that as the stock's falling. It's a bullish strategy. So you're thinking that that stock is going to continue to rise. And if it
I think
falls, you're picking it up at a price you would be comfortable owning that stock if you were to get exercised. There's no one
I think
saying
there's a
you,
little nuance to be had here. I don't mean to be argumentative, but
yeah,
the initial impulse of selling a put is bullish because by selling a put, assuming you're selling it to a market maker, in order to hedge that position, the market maker needs to go out and buy shares. But if the position decays and ends up being worthless because your strike never gets hit and you never get assigned and you never actually buy the shares, the market maker reverses that. They sell shares back into the market. And so there's an argument to be made here that selling a put is actually a bearish strategy because you weren't bullish enough to just go and buy shares.
but so what?
I say it's bullish because you're selling the put at a price where you think the stock is going to stay flat or go up. So you're bullish on the underlying ticker, and therefore you believe you're safe in selling that lower strike put.
Yeah, I can say when I think it's appropriate to sell a put. I think
Go
it's
ahead.
appropriate to sell a put if you think that price is going to go up and IV is going to go down and you don't want to hold the stock. I think that's when it's appropriate because those are the ideal win conditions for selling a put, right? Price goes up or sideways or doesn't reach your strike, but IV goes down. So you're winning on your delta, you're winning on your Vega exposure, and you're winning on theta because you've sold an option. And that's a triple win.
Big B says sell puts on tickers you will want to own. That is kind of the foundation of the wheel, and what I always tell people in Discord, like if they're trying to learn this stuff, first of all, don't even be thinking about selling puts on a ticker that you are not willing to own at some price.
And for me, it's
Because
if I want to own it,
eventually you will get assigned. You'll fuck one up.
yeah.
Have to throw this in there though. Also, not everybody qualifies for shorting stocks, right? So you might be able to, like, you might not even qualify to be selling a put or selling a call either. You would have to be able to day trade. I think in the States, $25,000. So it's not like open to everybody anyways.
You could have a cash secured put without having a big account, Kevin.
Can you?
Yes.
I don't know. I'm Canadian, by the way, Conway. I don't know.
Oh, okay.
You know.
All right. That does make a difference.
It does make it is more difficult for Canadians to do the options trading.
It definitely does.
Oh no, it's not. No, I don't have any restrictions. I thought they were all down there.
Well, I've heard from other Canadians that they can't even do options trading, and some UK people also. But I think
UK
maybe it
can't
depends
do it
on the
at all, I
broker.
don't think. Yeah.
But there are
I
transaction
don't even know
costs
if they
that
can do
UK
covered
can't.
calls. I think they can only do some specific ETF things or something.
Yeah.
But that's like
Uh,
their own, I don't know, situation.
Real quick, Tony and Kev, about Bull. I wanted to see if you could pull up the implied volatility on Bull as well, because something interesting shows up there if you compare price to implied volatility.
I'm showing
Let me see if I
69%.
Let me see if I can copy and paste it into
Like
chat.
at the money calls, IV, I'm getting like 45%.
I was
Or,
hoping to
sorry,
see a
sorry,
chart of
100%.
IV.
Are you wanting to look at the
104%.
options chain or just a summary of the entire thing? Options chain by strike?
No, I wanted to chart IV relative to price action, because if you can pull that up, what you'll notice is that implied volatility seems to have a recent ceiling at the same level as when Bull just sold off the last 2 times. In other words, every time IV got to that height at both most recent peaks on Bull, the stock sold off. And so in a way, what that is implying is that anybody that bought call options took profits when IV hit that high, and or people that were selling call options decided that that IV was a good IV to start selling calls at. And so with IV at a perfect double top, a double peak, that correlating so closely with price also gives you some context as to why and when the price was going to sell off. I'm going to see if I can post it onto Twitter.
Yeah, if you post it on Twitter, I can put it up on the screen.
Yep.
NASCAR says, imagine if you shorted HKD, ZJYL, or PGHL, your entire trading career could be wiped out. There are a couple of short YouTubers that I follow, NASCAR, and I have seen them lose $1 million in a day trying to short
Jesus.
retail tickers.
Yeah, when you said selling calls on Bull, I definitely would not be doing that.
I'm not. I don't short stocks because I don't want to lose $1 million in a day. Like I always, one of my favorite phrases is, "Do not underestimate retail's willingness to overpay something and drive it up."
Yeah,
you never know how high these tickers are going to go. For me, I like to play these trades long into the momentum, which is why I pay attention to all of these retail tickers, all of these retail YouTubers and Twitter accounts, to know what are people talking about so I can get long the stock early and exit. They're telling people it's going to $1,000. I'm out at 12. If I got in at 2, it's still a good run up, and it never goes to 1,000. So
hey Tony, I posted it on Twitter underneath your live stream announcement.
All right. You posted it on Twitter. Let me refresh up here. Oh, in the live stream announcement. Okay.
Yep.
Oh, on my live stream. I'm looking on your page. All right. Hang on.
Oh, I should have been more specific. But yeah, so what you'll see there is that price and IV are very, very closely correlated from this screenshot. So the last time IV spiked, the stock sold off. And then this most recent time, same story. Price went up, IV went up, price went down.
So now my question is, and this is something for us all to dig into, unless you already know the answer, did the price crash because IV reached its maximum where people turned the trade around, or did it crash because Webull made an announcement that day, a filing in pre-market?
Oh man, they could have set that up for that though. They can release that info whenever they want. You've been around the block. There's a lot of stuff that's going on behind the scenes of being front ran and
Yeah.
things like
So
that. And I'm definitely tinfoil hatty when it comes to the stock market. Like
yeah.
that felt a little bit like a setup for a lot of people.
I wasn't
To be
in it and I
holding
wasn't
bags.
watching it, so I
Yeah.
don't know. But I believe you guys. All I'm saying is that watching the price of the stock tells you a lot less information than if you're monitoring other things like implied volatility, what the options are doing, liquidity and things like that. So I think the more things you can find that give you signal, it can give
For
you a
sure.
lot more insight into how a stock is about to move.
This is what I was looking at, Kevin. This was the announcement, the F1 filing on 7/18 in pre-market that theoretically caused the price to tank. But if you open this up, there was also a prospectus for basically the same thing on 7/3, on 6/9, and 5/9. You can see these that I've opened up and looked at them. So I didn't understand why all of a sudden on the 18th there was a sell-off.
Do you use Grok at all?
Yeah, some from time to time.
Yeah, it's very good in like sifting through some of that stuff and helping clean up some of what's there. It's not perfect. Nobody is. A lot of these filings are annoying to use and look through and stuff, but it does saves you a lot of time. It really helps. To my understanding, it was like they sold something like 150,000 shares only of this 70 million shares that are supposed to be acquirable by this other company. And
this is what I mean when I said earlier, Kevin, I don't know if you were here for that, but I was talking about a domino effect when it comes to stock and options and things like that, particularly when, let's say, too many people buy too many call options, especially call options that are too far out of the money. And then something comes along, even a gentle breeze, or a minor offering of, as you said, only 150,000 shares or however amount it was.
well, no, this one is 19%. This one's massive.
Oh, this one was massive. Okay, yeah.
Yeah.
The point is, when that happens, you thin out that order book that we were talking about a little bit earlier, and any sort of adverse event is liable to knock a price down pretty severely, and that can be really painful for shareholders if they're not properly hedged or prepared.
I have not spent enough time reading through all of this, but yeah, I see what you're saying, Kevin. It says up to 159,000 shares, but then a couple paragraphs below it says shares prior to this offering 401 million, shares after this offering 476 million, assuming the sale by us of 75 million shares according to the purchase agreement. So I
I'm
don't know.
still seeing the float at 401. And
yeah, I mean,
like 470 or
you know
something
how
like
this
that?
goes when they do a SPA agreement. It might take weeks for the next filing where they update the share count before brokers ever give you accurate info.
So basically, the next time to buy Bolt is when that actually closes.
Yep.
But not before then. There's no point to buy it before then. It doesn't make any sense. And then it'll dilute. It'll drop. It should drop accordingly, percentage for percentage. And then when it closes, that means they've raised all this capital, and investors will feel more safe in entering with the new information. And assuming they want to enter, what I'm sure they will.
Dilution tracker is showing current shares outstanding 484 million.
I don't know what dilution tracker is.
They are very good about quickly taking filings and getting you accurate information, sometimes weeks before the brokers, because they don't wait for the company to file the next filing. They read this.
Yeah.
They understand it because all they do is report on dilution, and they update the share count.
So they're just going to assume it's happening.
Well, it did happen.
I don't see any news saying it's closed. So if it hasn't closed, then it hasn't
probably
happened.
still going on. Yeah,
you know what I mean?
Probably still going on.
And it's, I mean, they said that that's 2.5%. Like they get a 2.5% discount at market. What was the volume on that today, actually?
The other thing is, though, they had the float at 461 million before.
Yeah, so even the volume today, it's not even wouldn't even necessitate, if they were doing it at the market, which is what that filing says. It doesn't say it's like private or anything. It says at the market less 2.5%. The volume was only 30.82 million. So even
And
if they got, that's not even half of what they're supposedly.
I think with the volatility
saying?
on here, it's interesting enough for me to spend a day with that filing, trying to understand it, because I'm just kind of flying by the seat of my pants here. I only briefly looked at it, and I noticed that they had posted similar filings over the past couple months, and since I'm not trading bull, I'm not going to say that I completely understand the filing yet. I would need to sit down with it uninterrupted with a cup of coffee and read through it, and maybe like you, Kevin, put a few things in Grok.
I've been loving Grok lately, man, for the digging, for getting quick information about active warrants, registered shelves, whatever.
Conway BW Legs is asking, do you have to be good with math to be good playing options? What would you respond?
It definitely helps. I would say you don't have to be amazing at math. It definitely helps. What helps the most is understanding the win conditions for any specific option strategy. Understand what implied volatility going up or going down is going to do to your position.
Have you experimented, or do you use any tools like optionstrat.com where you can model buying an option and what your profit condition would be?
No, the only resource I use is Deep Dive Stocks.
What is it?
Deep Dive Stocks.
Deep Dive Stocks. Okay.
Yeah, it is run by.
I'm not familiar with that one.
The guy who started it is actually kind of a math genius. So his Twitter handle is @_Deep Dive Stocks.
Okay.
It's the only resource I use. It has helped me understand the market a lot more. He's helped me understand options. Full disclosure, I don't get any compensation for mentioning him or promoting him, but from working with him and helping him beta test things, I do get the service for free now. So other than that, I have no ties to him. I have no compensation or incentive to mention him at all.
All right. Well, I will check it out. I've been looking for a tool to help me understand options better, to improve my success rate.
Yeah. The nice thing about Deep Dive Stocks is it really monitors liquidity and options and generates a report for how stable or unstable a stock is. And the idea behind stability here is, well, if you know what options exist and you know what the market makers have to do, and you can see that people are aggressively buying or selling a stock or whatever, then you can tell with better predictability and accuracy if a stock is going to go up or go down. And also, if you can understand volatility better, then you can see if, risk to reward, if, going long a call, it seems like a good idea, out of the money or in the money, or potentially far out of the money, or better in the money, or more likely in a spread, right? Usually people trading options, they'll find a lot more success trading vertical spreads than if they were just long a naked option, for example, because it kind of dampens some of that volatility, but it gives you more frequent successes.
I'm looking at NASCAR's comment about Moon Market LCFY. I just want to check something here real quick.
Yeah. But yeah, to finish the question, you don't have to be a math genius, but just understand the win conditions. So if you're only interested in being naked long options, right? It's not just price that needs to move in your direction. It's volatility as well, and depending on what expiration you choose, it's got to get there fast enough for the option to be worth something. Otherwise, you can pick the right direction, right? Like you think something's going to go up, you could buy a call, but the price moves so slowly that you still lose money on the call, even though you pick the correct direction. And the same way with the other way, right? Like you could buy a put and think that something is going to go down, and it can go down so slowly that you still lose money on the put option. And usually that's because it's moving too slowly, or implied volatility is moving against you, or various other reasons. And it can feel really, really bad trying to trade options, if you're consistently correct on the direction, but you're wrong on whatever option you chose to transact with. So familiarizing yourself with the Greeks, familiarizing yourself with various options win conditions, that can help you out a lot. But in general, what I would say is there's a very good reason why people say to just dollar cost average into the S&P 500. It's the thing that has so far proved to be the most consistently profitable strategy. Most people cannot beat the S&P 500. You should probably talk to an investment advisor, because I'm not an investment advisor.
Conway,
What
but
else?
what about the people that say Warren Buffett said, get to know one company really well
You could
and
do
put
that
all
too.
your money in it?
I mean, you better be right. You had better be right. And I wish you all the luck. I only want to see retail succeed. So it drives me crazy when I see people who act like they're trying to help retail consistently get retail to lose money on things. So
what drives me nuts is people that say you're only allowed to invest in one stock. We all know what one I'm talking about. And you're not allowed to talk about anything else. No options. You can't talk about options. You can't talk about any other ticker. You certainly can't talk about index trading. Mutual funds, no. Why?
Those people still exist,
these people,
though, 5 years
yes, they tell people if you diversify, you are stupid.
I think that's
it just blows my mind how unhinged these people are about risk management. Like they have zero risk management. Let's just pick one company, go all in, and only buy and hold it, never sell, and then pray that the company does everything right, and that management always has our best interest at heart.
Yeah.
It's, for me, that's a lot of risk. I don't like holding more than a small percentage of my portfolio in one ticker, much less all of it. Seems crazy to me. But if you are right, as Conway said, then maybe it works out.
And if you're not, then you honestly don't have anybody to blame but yourself. Like I see people complain about market makers and short sellers for things that I can't always find evidence for. Like market makers generally are predictable. If they have positions, they're going to stay hedged. They may not necessarily fully hedge if they see naive flow coming in, because why would they, right? But for anybody that's caught off sides, sometimes you'll see violent moves. Other than that, the market's pretty
I think shorts are also predictable.
Way. I think so too. Yeah.
Shorts are predictable, which is why I've been releasing these videos talking about how to analyze fair value on GameStop, even though no one likes the numbers that my models are
why
coming up with.
A lot of people that got into GameStop, myself included, got involved because an article went viral estimating GameStop to be worth, over $1,000 a share pre-split at the time. And speaking for myself, I was a complete dummy back then. So I was like, holy crap, I think I found something amazing. So I'm going to, buy a bunch of this stuff. But it turns out that math did not check out.
My simple elevator pitch on what is a stock worth is what are your expectations for future earnings, and then multiply that times a PE ratio in the industry of the company you're looking at. That's what the stock's worth. Like if you don't want to do any math, you don't want to do any modeling, like GameStop, it's in specialty retail. Let's say the average PE ratio is 2025. Does it have $1 of earnings annually? Not yet. So how do you come up with a price target higher than $25? Like, where is your math? I get it. You want to say it's worth 50 or 1,000 or 3,000, but where is the math? You're just telling me hopes. So you need to understand how the market is looking at a stock so that you understand when the shorts are going to come in. The further you get away from what they think is fair value, the more pressure they are going to apply.
Also, what is the market actually doing? If a stock looks nominally cheap, People better be aggressively buying that thing, and therefore you should expect the price to go up. But if you don't see that happening, guess what? Price is probably not going to go up.
And
When-
if a stock's getting beaten down closer to
Yeah.
fair value, that's when you should start feeling a little more safety and going larger on your buys.
Yeah.
You want to be
Yeah.
buying when it's close to fair value and just being patient when it's hanging out in the middle, unless you're a momentum or swing trader and you start getting some real movement up in the stock, breaking through moving averages or supply zones, and maybe you go long on a swing trade.
Yeah. Yeah. And same thing for when the price is high. If people are starting to aggressively sell and take profits, guess what's going to happen next? Probably not going to keep going up. Especially if you start seeing large bullish options positions start closing and that sort of thing.
This is very problematic discussion for some meme stock traders. They get very angry when you talk about how to reasonably analyze the chart, the financials, the fundamentals, and how market participants are likely to react.
I'll tell you when people got the most angry at me over GameStop stock was starting maybe 2 years ago. I started seeing some pretty significant bearish options positions opening up on GameStop. This was around the annual meeting 2 years ago. And people were thinking that it was going to keep going. And I was one of the only people that said, unfortunately, I don't think that's true. And the reason why was because I started seeing like extremely large, put spreads start opening. And as expiry was approaching, those would get rolled out and down in time. And liquidity just wasn't there to support it. There wasn't enough buying activity to absorb the selling activity that was going on. And it finally got to the point of April of last year, where the earnings before that price was low, maybe $13 or so. And then it went up to 15 and people thought, GameStop's going to report a profit, they're cash flow positive, the stock's going to go up. So a lot of people ended up buying out of the money call options. And the ironic thing about doing that right before a binary event, is that right before a binary event, could be an earnings report, could be an annual meeting, could be a major conference that the company is expected to show up at. Implied volatility is typically going to be pretty high because that speculative premium is there.
Right.
People are speculating, shorts are hedging, and speculators are speculating, right? So implied volatility is going to be very high. Well, again, with the domino effect, what happens when that implied volatility suddenly goes away is that there's a lot of, if something moved very bullishly just immediately before it, there's a lot of selling that ends up going on, usually in very illiquid times in the after hours, into a thin order book, and so you get these ridiculous moves to the downside, and that really hurts, as a shareholder. And so I had been trying to warn shareholders for months, really, that GameStop had strong potential to drop to $12 to $10 per share. And, by mid-April of last year, GameStop was at exactly $10 a share.
I actually, owning the float was in the chat earlier. At that time frame, Conway, I was not talking to you, didn't know you, but I had a bet. I had a bet with OTF that GameStop would hit $10, and I won that bet. Not because I thought GameStop $10 was what it was worth. I mean, if you looked at book value back then, I think book value was about $6 on GameStop. And the chart obviously was telling us that it was going to go down. And that ended up being a great buying opportunity. And then we know Roaring Kitty came in after that. And
I backed the truck up at $10. I was buying, before that, I was selling put options. To take it back a little bit, there are times when I do sell put options. I'm not going to say I never sell put options, but I do. I was selling put options at the $10 mark. I was buying a ton of shares and I was buying a lot of calls back then at $10. And I even told people who were feeling really down, it's like, look, I just bought more GME shares at $10 a share than I have ever bought in the past 2.5 years.
That's when you got to be bullish and you got to know when it's close to fair value. That's when you want to go heavy in.
Yeah. And the reason why I had a feeling that it was going to hit $10 was for a couple of reasons. Going back to the question that I received earlier about where I said, know your win conditions and know how option structures work, right? what did the bear do? The bear had purchased a bunch of $12, $10 vertical put spreads. They were expiring in April. And you know, I was seeing a lot of financial gurus telling people, oh, GameStop's bearish. So, and this was after it fell after earnings, right? So people were shorting the whole, which is something that usually gets made fun of. But when it comes to some naive traders, sometimes they end up doing that, and then really silly things can happen. And so from a quantitative perspective, using deep dive stocks again, we could see that there was actually some resistance for further downside, but then a bunch more put options ended up showing up again at like some really silly times that it forced price below the $12 strike. And then for people that are, have been studying their Greeks, well, what does Vanna and Charm do to a position like that? Vanna and Charm says, well, the $12 puts that were purchased, over time, they're going to increase in bearish pressure because they're definitely going to be in the money. And that means the deltas are going to go closer and closer to negative 1.00. That's more selling pressure. And what are the puts on the $10 side going to do? Well, they're going to be close to zero delta. So they're not going to be providing that bullish impulse that we were talking about earlier about how selling a put is bullish. It's not always bullish, right? There's another end to that because of what market makers are doing. And ultimately what happened was that price, like technically it wicked down to $9.95 for like a minute, less than a minute, maybe a second. But price just stayed really rock steady at that $10 mark. And I was seeing retail order flow that I think a lot of retail got scared out of the position they ended up selling. But at the same time, we could see in the dark pools was somebody was buying all of this GME at $10 a share. And that's what really made me bullish about GME at $10. But before that, warning people that it was going to happen, I was being called all kinds of nasty names, even though I was right. And then even though I was right about buying GameStop at $10 again, people were still mad at me.
You can tell a fly over and over. A bee can tell a fly over and over that honey tastes better than shit, but it's not going to make the fly stop liking the shit. So it's not really, you can tell people whatever you want to tell them, and it's up to them to decide from that point. It's not up to all of us to convince people what to think about a stock, or, you know what I'm saying? Like, I wouldn't beat GameStop people too hard. If they want to be in GameStop and that's all they want to do,
yeah,
a whole other
I have
market
no
out there
problem.
for us.
I have no
Let them
problem with
do
that as
whatever
long as
wanna
they
do with
have
their
no
money.
problem with me swing trading, Kevin.
Yeah. Well, it doesn't matter if they have a problem with you doing it. They don't have any control over what you do. That's what the free market is. You get to do whatever you want, and you get to bet with your own money, right? So, and if you're right and you're proving them wrong, maybe they should turn around and listen a little more acutely to what you're saying, right? But
and
I wouldn't.
for the record, I made enough money on GameStop that I'm not trading it. I'm not swing trading it really anymore. I'm buying shares. If I think it's going to go down, maybe I'll sell a covered call. Other than that, I'm just buying shares, right? I'm not selling them. So for anybody that's still mad at me in the chat, just understand that that's what I do. That's what I've always done. So
what are you seeing? What are you seeing on GameStop now? I mean, we're about to finish up Q2. We've been stuck in this channel here for a year between 20 and 30 bucks. The company says it's going to be profitable moving forward, but still we don't know really what the scope of those earnings are going to be. I'm just getting ready to sit down and do my Q2 detailed forecast, but I'm curious what you're thinking, Conway.
What I think really just has to do with options. And what I see with the options is there's still a tremendous number of $25 calls that are out there. And again, most of those calls were sold to the market. And above that, there's a tremendous number of $30 calls that were sold to the market. And again, those are mostly sold to the market. And you have to expect that, the people that have sold those positions, they're looking at the stock too. So they need to decide if, okay, I sold a bunch of 25s. Do I need to cover? Or do I need to defend the position by selling even more, applying more downward pressure, buying some puts? We saw that last quarter, right? We saw that last quarter as price was nearing $30. We saw people start buying put options. But then as we approached that Bitcoin conference, price very briefly shot up to a little bit over $35 a share, but it only lasted for like less than a day. And then the stock sold off again. And then the BTC conference happened. That was a sell the news event. Price fell from $35 to $30. Implied volatility also fell tremendously as options positions started closing out, and price fell away from where a bunch of options had been concentrated. So that's really what I see. And that's what I mean by stability, right? If a stock is stable and it's rising and it's still stable, you don't really have to worry too much about that stock suddenly dropping. But if it's already in unstable territory, then maybe you do. Maybe you do need to worry about, whether or not people continue to buy. So GameStop generally doesn't like to be stable, and there are mechanical reasons for that too. Some of it involves, I hate talking about this topic. I messaged Tony about it early last week. It does have to do with DRS, because that appears to be a thing being pushed on other stocks as well.
DRSing is kind of being proven a joke on that stock, though, because they're just diluting. There's a massive shelf on GameStop. Isn't it like
DRS
700 million shares? Good luck DRSing a billion shares.
I don't think
no,
there's.
Good
there's
luck.
not. It's like 447 if you don't count the convertibles.
Are you talking about shares outstanding and overhang from convertibles, Kevin?
I believe that
No, I remember it a while ago, and I haven't followed up on it in too
Yeah,
recently.
well,
But there was a
this way.
shelf of like 700 million shares on.
Put it this way: for a very long
Meaning they can
while, the
sell that.
only thing you could really hear about GameStop on the GameStop subreddits was this very strong push to get retail to DRS, and a lot of shares were directly registered. They did get a lot of shares directly registered.
Yeah, and then they diluted, so that just
before that even
doesn't
happened.
mean
Though,
anything now.
before the dilutions even happened, price fell like 80%. Price fell.
Yeah.
From when people first started pushing DRS really, really hard on social media, price fell 80% down to $10 a share. So even though nearly half of the float of the publicly available float, right? So obviously insiders aren't counted here. Even though all those shares got DRS, it did not stop the price from falling, and that is for a lot of reasons. Again, it means that you cannot sell covered calls, which earn you an income, give you money to buy the dip. If you don't want to buy the dips, then you can go buy merchandise from GameStop, and that's what I do. I have a rule: if I find a need to sell a covered call, I'm buying something from GameStop, right? And if ideally I will pay for the extended warranty or whatever, because what is one of the things that has been notable about GameStop lately? They've been closing a lot of stores. They've been trying to get profitable. They are profitable, but revenue is down a lot because they've closed so many stores, right? If GameStop can increase that revenue and maintain that profit margin, grow that profit margin, that's where you get, a very sharply rising stock usually, because then the market suddenly says, oh, hey, wait a second. This is a company that's actually growing faster than we expected. This is now a very attractive investment opportunity. The market's not stupid.
That's why I think we're at a very exciting point, and this will be an important quarter for GameStop. What is going to happen to margin?
Yeah.
Compared to the last two quarters? Are we going to continue to see margin expansion? Possibly. But as you're cutting locations and cutting revenue, there's also this thing that I call, you've probably heard of it, diminishing returns, where you've got a set of fixed costs that start impacting margin expansion as you're dropping your revenue. I don't know where the pivot point is, or that we've reached the bottom where it's only margin improvement from here. I'm hopeful that is the case, but while others are saying, oh, it's definitely only nothing but net here going forward, I'm taking a more cautious approach.
Yeah.
I wish it would just pivot and not be GameStop. People buy games on Steam. They buy games through Epic Game Store. They buy games direct through Blizzard. They buy games on PlayStation Network. They buy games on Microsoft. Stop selling
mean-
Funko Pops. Nobody cares about Funko Pops. No one gives a fuck about a Funko Pop. Pivot, you got something like 8 billion cash now. You raised it all through diluting shareholders. Every single
think-
person. That is not from having a successful business. They literally drained all of you people. You still own the stock and you're shopping there. You're one of the people they drained. They drained all you guys dry for every penny they could get. They have an opportunity to pivot. They just need to do something else. Keep the
They
GameStop
will
name,
do
keep the
something,
brand,
Kevin. They will do
something
something.
else.
They will do something when the moment
You know?
is right.
Like,
I'm
don't-
just trying to counsel people. You need to have the right amount of patience, because their right moment, their right deal might not be on a time frame that you understand.
yeah. I mean, they're not in any rush at this point, other than the fact that they have all these stores that don't make any money. So
Well,
I mean,
they've gotten rid of
They
those.
still need to get rid of.
They've gotten
even
rid of
more
those,
those.
Kevin. They're only going to be profitable, they say, from here
Look,
forward.
Yeah. What I will say is I've made
Oh, they're going to
pretty-
close every non-profitable store.
They
I've-
have said they will only be profitable from here going forward.
I think for GameStop, their internal metrics are going in the right direction, except for the revenue part, just because of macroeconomic conditions and the store closures. But they are profitable, and they've been profitable every single quarter, which is ridiculously impressive compared to where the company used to be. For me personally, look, I've made a decent amount of money. I'm not gonna say how much. I've made a decent amount of money hedging my position and trading options on GameStop. So I don't really agree that I'm the one of the people that have been drained. Like, I'm doing fine. I just, having been in it for so long and having seen so much and experienced so much, and then also now understanding options and derivatives better and getting a better understanding for how things trade, particularly GameStop, because as I mentioned earlier, it's my special
Conway, I
interest.
just want to know, when does
Yeah.
the option chain tell you that we're going to go over $33 again?
33. Look, if we get it past 25, it's more likely that we can potentially approach 30. If we can get past 30, maybe we can get past it. But the main thing is, again, is stability. Like, are people actually buying the stock at those
I
prices?
think I'm predicting hype going into the Q2 earnings date.
I mean, yeah, but that always happens, and you see it on social media. So what I'm really interested in is just consistency and stability. That's it. And I think as a shareholder, that's what you're interested in too, right? It doesn't feel good when you see other companies announce an offering and they drop 5%, and then GameStop does it and it drops 20%. There's a reason for that, and it has to do with the order book. It has to do with hedging. It has to do with all this other stuff. But realistically speaking, are people going to hedge themselves when it's time to hedge? Probably not a lot of people are going to do that, and that's one of the things with retail favorite stocks. So
I want to pivot real quick from GameStop, because we've been talking about it for an hour, and just answer a couple of AMC questions. I don't own any AMC at the moment, Feek, but yes, I still follow the industry closely. I have trades in other tickers in the industry. If you follow my channel, you know which ones those are. Or if you're in the Discord, you know which ones those are. I have put out my prediction for the earnings. I'm expecting it to be flat to slightly negative, but I'd certainly take a positive if they're able to deliver it. That's going to depend on what percentage of the market AMC captured and how their food and beverage did. So I'm not predicting massive profits for Q2, but I'm always hopeful. And go watch my video that I put out at the beginning of July. And when that earnings call happens, I'll be live streaming it. There are a couple of other AMC corporate action type things that are still keeping me out of the trade because I'm trying to manage my risk. There's not a prospectus, what's the word I'm looking for? They're going to put out a vote. What's the word? In October for a December shareholder meeting. and I want to see what's on that vote. They're going to ask for more shares. How many?
AMC?
Yes, they have to.
Again?
They have
So then
to.
when it gets voted no, they're just going to make ApeCoin 2.0
If
and just do it anyways?
people
That's the
vote
company at
yes,
this point? Oh my God.
this was part of the
Fucking
July
unbelievable.
debt restructuring that got announced on July 1st.
Ugh.
If shareholders vote yes,
Hmm.
AMC will get a reduction on the interest rate of their convertible notes from 15% down to like 1%.
What is
If
let me ask you a
shareholder, wait,
question.
it gets worse though. If shareholders vote no, the interest rate goes up to like 17%.
Yeah, let me ask you though, at what point do you just say, like you pull a Hertz and you go bankrupt and you just let it happen? And then if you want to like recreate AMC after the fact,
Well, I mean, as
why
long
are they
they don't
continually
need to.
destroying and eroding shareholders' value and
Nobody's
wallets? I
making
don't get it.
people hold the stock, Kevin.
Yeah,
People,
but
if they're getting eroded, that is their own choice to buy and hold. People are betting on box office improving, and there will be a point, maybe next year, maybe in
no, I'm generally
2027.
coming from a position of not understanding what is holding them back from just saying, you know what, we weren't successful closing it, and then
Because they
going through
still
the
have
procedures.
as long as they have the ability to raise cash, they're going to keep doing it. Companies don't typically file Chapter 11 unless the writing is in the wall. And this is my concern, Kevin, to your point. If shareholders vote no in December, that could be a catalyst for the company to say, well, fuck it. We have no more cash raisability. We're out of shares. Shareholders just told us no. And just like what happened to Meta Materials, a few weeks after shareholders voted no, the company filed Chapter 11.
Is that MMTLP
No,
or is that MMAT?
MMAT.
Okay.
They asked for more shares. The retail is like, no, we'll squeeze if we tell them no.
Yeah.
And they voted down the ability for the company to have more cash raisability, and then Meta filed bankruptcy. Of course they would. Of course they would. They reached the end of the road. There's nothing else they could do. They wouldn't have been in bankruptcy if people had given them, yes, you would have got diluted, but no one's making you hold either. There's layers of decisions you got to make here.
This is like deja vu because I vaguely remember this happening in 2021 with AMC as well.
It happened in 2023 with AMC also. The ape AMC conversion.
The ApeCoin. They just circumvented what the shareholders.
If you voted no, you were voting for
still made
bankruptcy. If you voted yes, you were voting for dilution. But either way, it was not going to end well if you held through it.
Yeah.
That's why I exited. Like once the judge made her decision, I exited the trade back then in 2023.
Like just go bankrupt. Let it happen. Who gives a shit? Well, what's the downside?
The shareholders give a shit.
They have a duty to all stakeholders, including the bondholders, to avoid bankruptcy if they can. Because if they file bankruptcy, Kevin, the debt holders are not going to be made whole.
Yeah.
The company has far more liabilities than assets.
They plowed money into a sinking ship, they lost, and they're probably still going to lose because we're 5 years in and this is not turning around.
If box office grows, AMC is on the brink of being able to be profitable. But we need bigger box office. If we're stuck at this box office next year, they're fucked, especially if they have no more shares to sell.
What do you think? Do you think tariffs is going to impact this
No.
substantially?
Not directly, but indirectly maybe. Because if I hate using the word inflation because inflation means so many different things depending on context. But if inflation increases as a byproduct of tariffs, people are just going to have less discretionary income to spend, and that's going to affect box office sales, period.
Big B says, so much talk still on AMC and GameStop, so many other tickers to make money on. Yeah, look, I agree with that. We talk about a lot of tickers in Discord, and occasionally I make videos on them, but no one watches those videos. So when I come on YouTube, what do you think I'm going to talk about? You know how many 100% bangers I've made videos on, Kevin, that nobody watches? And
Name some.
then they say, what
Let me
what
look
plays
into 'em.
did Tony ever tell you
Yeah.
about? I've told you about a lot of them, and
Yeah.
most
Yeah.
of them 2x'd with
Same
very
here.
low risk. These are profitable blue chip companies,
Yeah.
but people
I-
don't want to hear about that. They want to hear about the short squeeze plays. So
I same here. Like, I go through data reports every night, and over the years, I've found so many plays that doubled, tripled, some even quadrupled, and that's just on shares, right? Not even talking about options.
Oh, yeah, for sure.
But nobody cares. It's just when I say something about GME, then I get impressions. So I think there's just something going on with social media algorithms.
It's hard to explain why people are so resistant to looking at other companies.
Yeah.
I don't know.
I
I'd love to talk about other trades.
I don't
Yeah.
think they are, because right now in this very moment, like in my Discord, people are like, I can't believe these guys are on here talking about AMC and GameStop. Like they don't even want to talk about it. So I think we're at an impasse where some of us were over it. It happened. Like I did very well, Conway, on AMC. It was
Mhm.
like they were parallel, right? They were both
Mm.
the same. You went $10 to 400. We went $2 to 72 bucks.
72.
So, you know, um, sounds like we've mostly moved on. You're doing more advanced strategies, so you're still in the position somewhat, but like you're exploring everything else that's out there. And I think there's a whole group of us, and that's where I went and started doing YouTube, right, Tony? Is I started with the red box, and now I talk about S&P 500 type stuff. My last few videos were all like Navitas, 4 weeks ago. So before it's blown up now over 100%. It's like we aren't stagnating, and there are a lot of people that are. It's just we're not getting pushed. I think, like he says, the algos. We're not really getting pushed.
Yeah,
by
I can
YouTube or
tell you
nobody.
in my Discord, we have 50, 100 different rooms of different tickers, and everybody is talking about other trades on YouTube.
Mhm.
Nobody wants to watch that. I wish it wasn't that way, but that's the way it is.
Yeah.
If you want to know about other tickers, join the Discord. Bring your ideas. We talk about and trade many different stocks. I just don't make videos on them because look, it's a time commitment, Kevin, to make a video.
Oh yeah.
And I'm not going to do it unless I really think it's a compelling play, or I make videos on a lot of retail stocks where they're just being pumped. A lot of no revenue companies like this Railtown, where they're being pumped. It's run up 200-300%. The company has no revenue, and people are I see people in live streams putting $100,000 down on these penny stocks. And I'm going to weigh in with a couple of thoughts. I know that, look, if you put $100,000 down on a company with no revenue that was trading at 20 cents, you probably don't care about risk. But there are some people I've learned over the years that have regret after the play collapses. If I had only known about the risk. So I'll be that guy. I'll be that guy. That I'll bring up the uncomfortable stuff. I don't want you to sell. I don't short your tickers. I like to play retail momentum stocks long, but I will tell you what I'm looking at, what I see as the risk, and then you can use that information or you can just ignore it. But I'm accumulating many tickers where I've done this exact same thing and called them before they ran up, said the run up was going to happen and that they would end up in bankruptcy. And they did. BBIG, GTII, MMTLP, BBBY. These are very easy to tell what's going to happen by looking at the financial statements and the filings. You can have momentary volatility. I play it. You can play it too. You should play it, but have a reasonable exit plan and stop listening to these goofballs who never, ever talk about risk.
It's just that lottery mentality. A lot of people, they want to get rich quick. So
I get it. I do too.
I get it. Yeah.
But I also hate losing money.
Me too.
I don't even like losing $5, guy.
Right.
$5.
I'm going to be that guy, that little annoying voice in your ear saying, man, we just ran up 300%. Might be a time to think about taking a little bit off, you know?
Yeah, open was like the most easily predictable dump off. I was live streaming and I'm showing this right now. It's like 479 or like 492.
Yeah,
5 minutes, it did 36 million volume to the downside and halted. And then I said,
Yeah.
this is gonna unhalt, gap down, and it did. It gapped down to like 308 or some shit. That was quick money.
I didn't look at
That's
open until today.
1,000%.
Yeah, I didn't look at open until today, just because
Uh,
someone randomly messaged me, and I'm like, look, implied volatility is 335. That's not normal.
yeah,
It's
that's
a bubble,
extremely high. Yeah.
you know. And literally, I didn't even look at the chart. I didn't even look at the data or anything like that. All I did was I looked at an options chain and the implied volatility, and I'm like, okay, I've seen this a million times. I don't need to know anything else
They're
about what's
trying
going on.
to. The funny thing about it is they're trying to use GameStop's name. They're trying to name drop as if it's GameStop, or as if anyone in GameStop gives a crap about private equity open door.
Yeah,
Like,
that's been a
you
pattern.
don't.
ever
I
since
know you don't.
2021.
Yeah.
Big B says he made 828% profit today on ALAIF. That is a nice run up on ALAIF. It ran up from the $88 range to 124. Very nice. I'm guessing what you had call options.
Those kind of returns, yeah.
Astera
Sounds like-
Labs, global
sounds like naked long
semiconductor
calls.
company.
Which,
Yeah,
hey,
very nice.
congratulations.
I love to see stuff like that. But yes, I mean, I'd love to do live streams with you guys. I stopped doing the daytime live streams because it just got too toxic. Once I sold my AMC, and I had already been swing trading GameStop for a couple years. And you know, if you want to know what I'm trading day to day, we talk about it in the Discord, or what we're looking at. Maybe now is the time where we start talking about other tickers. But then you got these loudmouths, the GameStop YouTubers. Oh, he's trying to divert you to other tickers. He's talking about other tickers, guys. Oh,
For those
it's the
people,
most childish nonsense I've ever seen. Like,
What
do
I would
these
say-
people not realize there's a stock market with
I guess I'm
thousands
too
of
small
tickers,
to
and
have to deal with
I've been
that.
trading them for 3 decades. I'm sorry I hurt your feelings by talking about another ticker. Grow the fuck
what
up,
I would
you
say about that,
man
sorry to
child.
interrupt, is look, what Tony is saying is true, right? There's other things that go up, other things that go down, whatever. Sometimes GameStop's boring. In fact, in my opinion, GME is boring most of the time, right? Larry Cheng tweeted something
Dividend
today
right now?
about like not paying attention to the stock chart every single day, and I
I saw
agree with
that.
right? But think about it this way, right? Just like having to go out to work, to a job, to make money to bring back home. You can think about it that way too, right? If your intention is to buy more of a company or to support a single company or whatever, you know, you can totally make that happen by making money in other places and funneling it back in. That's kind of what I try to do, right? Like I owe GameStop stock a lot because I really did not know much about the stock market when I got into GameStop. And since then, I have learned so much more. And it would not have happened without GME, right? And so
The other thing I
like
just want
support
to
the
add,
company.
I want to add to your point is, as you're
Yeah.
playing those other tickers, Conway, you are monitoring GameStop, and you know when it's overpriced and when it's underpriced. So you can stack that money on other trades, and then when the time is right, you can buy GameStop when it's relatively cheap.
Yeah,
Which is
if
what I try
think
and do.
GameStop's
That's
right.
what
If
I try
if I
and do.
think GameStop's going to go down or sideways, you know, there are ways that you can profit off of down or sideways without even having to sell your stock if you don't want to, right? And then I take that money and I try
There's
to go
not
make
a lot
money
of reason
elsewhere.
to hold a stock if you think it's going to fall. You would just sell it and then rebuy it lower.
Well, if you can hedge the
If
position,
if
and
that's
say,
what you thought, there's
yeah,
literally no reason to just eat a loss.
no, well, I mean, if you can hedge the position and stay relatively flat, then that's fine too, isn't it? And that's what I try to do. And if
Like you
so far
said,
I
you
haven't.
sold and then rebought at 10. That's
No,
how
I
you
didn't. I
should
didn't say
do.
that.
I thought that's what you said. You said
No.
you noticed all the IV, you thought it was going to fall. You
Yeah, I
sold your
did.
position and then you rebought at 10, and then you had all these extra shares or something like that.
No, I'd made a bunch of money on the option side. So to stay with some skin in the game, I held through all of that.
Oh, okay.
With other fellow shareholders, but at the same time, I wasn't buying on that way down. And then when it did finally get to that point at 10, I backed the truck up, and I had a bunch of money saved up, and I loaded up on shares. I got assigned on some of the puts that I sold at 10.50. And
you got paid to buy GME.
I got paid to buy GME. Exactly.
So okay.
J Star says real traders would probably like a late night live stream to talk about the markets and other symbols. I would love to get back to doing that on a regular basis. We used to do these like every other night.
I thought you still were. I had no idea.
No,
when you invited me, I was like,
the last live stream I did was on the 11th. It just gets really tiresome, Kevin, hearing all these nitwits say, "Oh, you didn't say what I wanted to hear about my ticker, therefore you must be short." Like I'm doing this for free, sharing my time for no pay.
Yeah.
You make pennies doing a couple-hour live stream, and I don't need to deal with the headaches. I got people in my Discord that actually want to learn and trade mini tickers. That's where I spend my time. If there was an audience for it on YouTube and I didn't got to deal with nitwits saying just because I said something that hurt their feelings about their ticker, my DD, based on reading a filing, if I didn't have to deal with those people, maybe I'd do more live streams. It's tiresome, honestly. It doesn't mean I'm going to quit. You're not going to run me off, but I'm going to come at it when I have the right mental energy in the free time. I guess Mediocre is not going to join us. I thought he was going to pop in. I haven't seen him join in. We're going to be here about 12 more minutes, ladies and gents. My wife is home from work now, and I have not eaten dinner yet. So got 2 reasons to wrap this up. I want to give the 2 gentlemen here a chance to add any closing thoughts or closing tickers that they're looking at. Conway, let's start with you. Anything you want to say that we haven't gone over?
Not particularly. I mostly trade the S&P 500 these days. A little bit of the NASDAQ.
Are you doing options on the index?
Oh yeah. It's funny. I used to go from never touching options to now I only touch options. So I've come a long way. I'm not going to say that I'm a great trader. Like, I'm not going to sit here and pretend that I'm a great trader, but I find it challenging. I find it rewarding, and learn a little bit more every day. So that's about it, really.
I appreciate your time tonight, guys. If you want to check him out on X, it is Conway, Conway, Yen. Kevin, what else are you looking at, or what else are you thinking that you want to tell the folks tonight?
Right now I'm watching SRFM. Seems to be coming off of a very massive double top. So, but Palantir owns 19% of it. So I'm thinking the bottom on that right now is about $4 and change. Should be the EMA. I own a sizable position of it. Like just got in the last, basically today and Friday. I got in some Friday and then sold in the pre-market for profit, and then rebought the dips today. But I know there's some retail baggies in that bad boy. So and then the Palantir, you can't ignore that. It's a shit co. Don't make no money. The technology is probably garbage, but they're interested in it for other something about like the navigational technology and some mapping and stuff like that. Nothing at all to do with their electric airplanes. I would not be looking at it like, oh yeah, this is like the next cool airline stock or something. It's definitely not. It's Palantir's interested in something there. But it's definitely not what they're advertising themselves to be, for sure. But I just that Palantir, I mean, that stock was $9 and I scoffed at it, and it's $150 now. So clearly $360 billion market cap. If they're going to put 19% of the float of this company under their wings, anybody watching, you might want to look at it. Like I said, your best entry is going to be around 4 and change. And then I'm just watching some Webull. I'd be happy to get in that around like 12.50 or something like that. Navitas, it's the stock I've been talking about on my YouTube for 4 weeks. Got in at like 4. Haven't not been able to get back in. Sold out. Made like 9,200 on it. Left like 47,000 on the table because I was asleep. And I had 50,000 shares. It's overbought to me. I don't know. But NVTS is, I guess that's what they're talking about on TikTok and shit right now, is Open Door and NVTS. What, we were well ahead of that, and I still think it's currently overbought. They don't have any profit yet. They shouldn't expect it till Q3 2026. So that's long term, but I will be watching that. We watch S&P 500 stocks mostly, right? So earnings is like right now, all the earnings, I'm sure you're well aware. So we're talking about all the earnings plays like pretty much every day, and that's going to be options trading mostly. It's risky because they can blow you out and just destroy the options. So it's not for the faint of heart, but you can make significant returns on them as well. And then what was the other one? Open Door. We'll keep an eye on that. I'm not too, like I said, I'd be perfectly happy if Open Door went bankrupt. They, in my opinion, are part of the problem of America and Canada, where we can't afford houses because it's private equities taking over. So, but if retail wants to get in there and FOMO and pump and dump and stuff, I mean, there's definitely money to be made in swinging it in between the EMAs and the drawing Fibonacci retracements on it and stuff like that when it does pop, or picking up price when it's hitting support and stuff like that. I don't really do a lot of the low float stuff. Like that guy was talking about LCFY or whatever. It looks to me like it's just reverse split a bunch of times. Looks like totally garbage. I probably would stay away from that myself. I don't know. I just wanted to check in on you and see what you were up to since you invited me. So I didn't really have anything planned or anything.
I'd love to have both of you guys back at some point. As time permits for myself and yourselves, I'll shoot you invites, and if you want to join in the future, you're certainly welcome to. I love hearing other people's thoughts. I certainly don't know everything. I just know a little bit, and but I do sit here all day reading and researching. And my channel origin, for those of you who are just tuning in for the first time, I was not in GameStop in the original squeeze, although that got my attention. I was trading, and that kind of got my attention to looking at short squeeze stocks. And I got in AMC late May when it was cheap. And then before it started running, I bought some call options. That's where I made my money, on the call options on that trade. And then
on which story?
AMC back in June of 2021.
Oh, wow, okay.
What drove me nuts, and the reason that I started my channel in July, is as I was selling my call options, cha-ching, 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 I was watching Trey and Matt buying call options. I'm like, what the actual fuck? What are you guys doing? It drove me nuts.
It drove me nuts too.
So that is how my channel started.
And I know you guys do technical analysis, so I mean zero offense by what I'm about to say. This is why I hate it when I see people using technical analysis to then trade options, is because options operate by such different rules than what technical analysis traders, use. That there's like, because technical analysis will tell you to go long when something is at like a bajillion IV, and people are starting to take profits on calls and selling calls and buying puts and put spreads, so like
I think I'm pretty strong on understanding company motivations by reading the filings.
That too.
I'm pretty good at technical analysis by looking at the chart. That That's
Yeah.
not rocket science. But the
What I-
options chain is the third leg of the triad. For you to really be successful, I think you got to be good at all three.
I think so too. And what I will say is that some of the best traders in the world use technical analysis. Some of the
And
worst traders in the world also use technical analysis. And unfortunately, there's not a lot of the former. There's a lot of the latter, and the latter drive me nuts. And Matt, Trey were definitely in that camp of using technical analysis to trade options.
If I could do anything like with my free time to improve my trading, it would be spend more time becoming an options expert. I mean, we're talking thousands of hours of reading, observing, trading, talking to people smarter than you.
Well, that's just it. Is most of this stuff just comes from screen time. You know, you stare at these screens for long enough, you're going to be a little bit miserable to start off with, but once it starts making sense, then you know, you get better at it. And there's no shortcut and there's no secret behind it. It's just, you know, it's just work.
I feel like it is the missing piece. Like there's certain run-ups that I just didn't see coming, that then I see people like you or other people that are talking about the options like, oh, fuck, man, if I had just seen that they saw, I might have gone heavier in this trade.
Yeah. But how many times has that happened to you?
Only a couple times per year.
Oh, okay. But frequent enough that
if I had that missing piece, I think it would meaningfully improve my profits.
Sure. But my point is, look, I think FOMO hurts a lot of people, hurts people a lot more than it helps. And what I'm trying to say is that I don't necessarily think that you have to go chasing after everything.
I'm a very infrequent option trader. Yeah, I gotta have a really good feeling.
I think opportunities come around frequently enough so that if you miss one, there will be another. And so you don't have to, like, if a trade is making you nervous, there's probably a reason for that. So trust your gut, you know, have some survival instincts about you. Don't be like some of these people that are FOMOing at the top and then losing it all in highly leveraged trades, because that's really hard to recover from. Number one rule of investing is don't lose money, right? So keep that in mind.
K222 Kevin says, are you guys doing this full time? I feel it can be hard watching and doing trades while working. My general thought is if you can't watch the screen full time, then you probably should not be trading options or day trading.
Definitely not options if you're in the middle of the day, because options can change rapidly. But
options can change extremely rapidly.
That's just my general thought. Like, if you can't sit here watching the screen, yes, I'm up watching the screen from 5, 6 in the morning till 7 o'clock at night. I have the time to do that. My businesses that I run from home now. So yeah, I can be here all day. I can't imagine trying to do options or day trading not sitting in front of the screen.
Yeah. And
it increases really your risk exponentially.
It does. Yeah.
Because things can change in a moment.
There's a reason why anybody you ask these things says, look, get a financial advisor, and they'll probably tell you just dollar cost average into the S&P 500. For most people, that is going to be the most consistently profitable thing that you can possibly do.
If you can't watch stocks all day, then buy ETFs that match the market indexes and just dollar cost average into them. And then, you know, if you want to have a little fun money to bet on some long-term tickers because you love GameStop, then there's nothing wrong with that too. But when you're going all in just on one company and you don't have time to sit here and watch for news, watch for filings, watch for economic news, there's so many things that can turn things on a dime that it can screw you up.
Yep. Carl J says swing trade options out at least 3 to 6 months out, and
that helps.
I don't think that's necessarily good advice. I think options are dynamic.
I don't know about that.
Options are way too dynamic.
That's really expensive, and that's 6 months of uncertainty.
If you have good picks and you're buying at the right time when IV is low, like if you're buying call options, I said this earlier about GameStop. Like if I was buying call options when IV was low, like we were talking about this weekend, I would be looking at 3 to 6 months out if your main concern is minimizing risk. If you might also have a different concern, which is I only want to maximize profit, I don't care about risk, then maybe you go with a shorter expiration.
Yeah,
But that,
I would
that's such a personal decision. There's no way we could advise you on that.
Yeah. Yeah, I would say it's just the options market is too dynamic. Sometimes the best trades are the very short duration ones. Sometimes the best trades are the longer ones. Oftentimes it's not even just buying a call or buying a put, it's being in some type of spread. And most people, they may not even be comfortable trading spreads, in which case, options just aren't for everybody. It gets complicated quickly. And, you're starting to get into investment advice, and that's just, that's a slippery slope there too. So I think opportunities exist, and the best way to capitalize on it is just educating yourself, being very observant, being very detail oriented, and having experience, having that screen time, and just getting good information and trying to block out as much of the noise as possible, because there is
I was going to say that you got to block out all the social media nonsense, because that's going to lead you to pile into
really
short
dumb
term
trades,
call options, expiring on Friday because someone said that they're convinced it's going to go up, and they put a bunch of colorful lines on a chart and posted it on X, and it got retweeted a bunch, and then you go and then nothing happens.
Yeah.
I mean, I hate losing money that way, so I tend to not do that.
Yeah.
All right, gentlemen, thank you for your time. Ladies and gentlemen in the audience, and the two gentlemen that spent their evening with me here for the last couple hours. I appreciate you guys, all of you.
Tony, thanks for having me.
Yeah, you're welcome back anytime. Kevin, I look forward to chatting with you some more.
Yeah, man. Thanks for having me. And,
it was nice meeting you, man.
Conway.
Yep.
I'm going to run the
success with your endeavors.
I'm going to run my GameStop up and to the right tribute video. I hope it does go up and to the right. I'd like to get a next exit on my swing trade into the next volatility swing between now and the end of the quarter will be over end of July. Then we got to wait 5-6 weeks. So maybe we go up and to the right over the next 8 weeks. We will see. Good luck, everybody.
Good luck.
See you, buddy.
Up and to the right. Up and to the right. Up and to the right.
Hello, millionaires. Short screenplays where fortunes flip. GameStop's journey, an epic trip. From humble roots to the moon we fly. A company's dream will amplify. Reddit warriors, keyboards in hand. With their eyes on the prize, they took a stand. No one's selling, we're here to fight. How does it go? Up and to the right. Up and to the right. We're in for the ride. It stops on the rise. It can't be denied. Up and to the right. Through the day and night. Together we'll soar. Masses in sight. Up and to the right. We're in for the ride. It stops on the rise. It can't be denied. Up and to the right. Through the day and night. Together we'll soar. More asses in sight. Hedge funds trembling. Kenny's in shock. GameStop stock. You'll never stop. From diamond hands to rocket ships. We're not selling. We buy every dip. Up and to the right. We're in for the ride. Up and to the right. It can't be denied. Up and to the right. Through the day and night. Up and to the right. More asses in sight. Billions in cash on the balance sheet. We will win even if they cheat. Dilute us more, we don't care. Book value grows with every share. The doubters say it can't be done, but the retail army we've already won. With every share we'll never stop. Investors say we love the stock. Up and to the right, we're
surprise.
We're gonna win.